Market's back up to its same old pattern. We'll talk about that next. Well, the market's back up to its same old mojo. That's right. Over the last couple of days, we're seeing the market do exactly what it's been doing over the course of the last couple of years. After a very good rally off of support here at the 50-day moving average, again, kind of what we expected in the month of December, we had the Santa Claus rally taking us back up to all-time highs. Now, as we've seen every time previously, these corrections back to support lead up to a rally where we then kind of flatten out and trade sideways for a bit before correcting back towards the 50-day moving average. This is not something that just happened over the last couple of months either. If we look back over the last year, we see the same pattern repeatedly occurring. A rally up to resistance, a flat line, a retest of the moving averages over and over again. We've seen this repeated stair-step pattern continue. The only exception to that was really the sell-off that we had in October that tested the bottom of that support and resistance levels of the markets. It rallied back up to all-time highs, traded sideways, and then retested the 50-day moving average once again. So again, this repeated pattern that we see has continued to occur over the last year. Now, at some point, we're likely going to see this actually break to the downside and see a bigger correction at some point. But currently at the moment, markets are back up at resistance and starting to struggle here over the last couple of days. So again, this kind of wraps up the first 5 days of January. And because markets are already back to all-time highs, this suggests that we may see a little bit more volatility heading into the next couple of weeks, particularly as we approach Options Expiration Day and the third Friday of the month. Why is that important? Well, because if we go back and look at the market over the last year, all of these corrections to the 50-day moving average have been on the week of options expiration. So again, as we continue to see these option trades roll over, we've got a market that trades on light liquidity. The risk of a downside correction, again, that's not much right here to the 50-day moving average, but a risk of a correction back to the 50-day moving average, certainly well within possibility here. That would provide a better opportunity to add exposure to portfolios, to rebalance and reposition portfolios for what you expect the next few months of the markets to be like. Also watch here, our money flow indicator is starting to flatten out and turn over. Normally that precedes a correctionary period in the markets. Again, we're not talking about a major correction here, but a correction of 2 to 4%, certainly well within the context of norms. That would also keep us well defined in this consolidation pattern that we've actually been building since the beginning of November. So again, markets are just really kind of well defined here within this kind of trading range, have not broken out of that just yet. We'll see what happens here over the next few days. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.